So hey guys, we're back with another post-market analysis breakdown video where we analyze how price moved, why did it move that way, and what are the possible opportunities that we had in the market. So again, as the normal routine goes, we mark out the previous day high, the previous day low, and I start watching the market from 7 a.m. New York time, right, which is this line right over here. Now, obviously, context is very important. So before doing anything, I always analyze that what happened in the previous London and Asia sessions. What do we see here? We see a simple channel. This is the channel right here. It's a very tight channel, right? And there are multiple channels within this channel. So again, if you look at it, this is another minor channel, a channel within a channel. That means the trend is strong enough, and also it is strong enough that the tight channel is being maintained for a long time. It essentially started during, near the Asia, the Tokyo session, and it lasted almost even till the New York Open. Now, what is the, what happened after the market opened at 7 a.m. EST, especially for me? Price was already moving up, channel intact, price moves up, comes back down. Now, at this point, right here, this would have been a good enough long. Even for a close 1 to 2, I could have exited on a 1 to 5 just because the trade was good enough. But this happened on a news candle, like on the NFP news bar. So I couldn't really trade this. So I was still waiting. Now, this is the first time that the channel is being broken. You see here, channel broken. Continuation didn't happen. Again, sorry. Yeah. So the channel broke, continuation didn't happen. As I've said, multiple times by now, that most of the channels that break out like this, the breakout fails unless the trend is extremely strong enough, for which obviously we need more evidence. That didn't happen here. And then price straight away pulled back to the low of the channel. Now, this is a really wrong long pullback, right? So essentially I would expect to go here, then it goes here, probably fails around the same level, and then moves up if it has to continue. Or price could do something entirely else. After this breakout, price could actually, this becomes the test area of my channel, right? So essentially price could even come back here. Price could do this, broke out, pulls back, goes here, and sorry, breaks out, goes back, goes here, and then goes straight here, right? But essentially this entire channel, it was really strong. So I didn't actually have any trades by then, and I was just watching the market. Now what happens is, very small second attempt, goes down, goes up, second attempt to go down, fails. Now, if this bar was a small bar, then that would have been a great risk to reward trade. Like I would have held the trade for a 1 to 3, 1 to 4, but this formed a really strong bar on the 5 minutes. Now, since the price was already bullish since the entire day, it was also near the previous day high, and I was on a bullish bias. I wanted to trade this expecting that this would become the new breakout phase. So my trade was right here. I entered right here, SL below here, and I had a clear 1 to 2 risk to reward. So this was essentially my trade, right? But let's watch like what price does after this. So let's delete it for now. And what price does after this is, as I've told you a couple of times, this entire phase, right, from right here till the low wasn't even swept off any bar, this becomes the breakout mode. What happens after the breakout mode? There is a pullback, right? And the price forms a tight channel. What happens? Price pulls back the first leg down, and it forms a tight channel. This is the tight channel, right? This is the tight channel that happens. Now, anywhere around here, even after this breakout and this second reversal up, I could have bought further here, expecting it to be a tight channel, but I didn't do that because I could see that the price was overextended, and this breakout could have easily been, just a false breakout, and price could move back down here. But I didn't want to trade it because I already had a good trade running. I had made like 233 points on that trade. But you could have traded any one of these positions if you didn't take that trade. So if you would have taken this position right here above this, this big bar, SL below here, you could even keep your SL below here for, if you want to be more safe with your entries. And then again, simple, a 1 to 2 risk to reward. With the trend trade, a simple 1 to 2 risk to reward. Now, you didn't trade that. tight channel forms. Now here you see the breakout of the tight channel. Again, similar as we saw here, we see the breakout, we expected to fail, breakout, pullback, continuation. Can't even make clear new bodily highs. That means we were looking for, a pullback maybe to form a wider range. Exactly as, I thought about it. One leg, one leg, two leg. Now these legs, oh, one leg, two leg. Now sometimes these legs can be very measurable. So you see this leg, right? This is the breakout. Sorry, this is the pullback. Ah, really bad at this. Yeah. So now I could. What is fucking happening? Okay, here, right? Yeah. So from here, I could see this. This becomes very similar. Didn't go all the way there, but this was a kind of a measurable move. So you guys can always measure on the basis of this to see, in what direction, or is the price breakout is over, could it move further. Obviously, this was really late in the day, but time of day doesn't matter as much. You just have to look for liquidity zones, points where you can enter better positions. And if you look at it here, this was the wide range after the tight range. Again, exactly pulled back, second leg, higher low confirmation, exactly on the point where I expected it to stop, it reversed back. So every day you have to just do the same thing. You have to see what is price doing. You have to wait for the best looking opportunity. You can have a clear strategy of it, that if it does this, then I'm going to do this. But it is always better to understand the basics of price action, because then you would be able to take better trades, hold to them longer, because you understand the logic behind it, right? So this was for the MNQ. Let's move on to MGC, right? Let's move on to MGC, and I haven't even marked out my levels here. Let me just delete all the previous drawings that I have here, and let's go to the one day chart, right? In swing trading, you don't need to essentially look for a lot of things on the one day chart. I actually do not even watch the one day chart. I just mark out my previous day high, my previous day low. What is the reason for that? Some people might say if you watch it, you would look for better swings. But I think, like, when you're doing this, like when you're swing trading on the 5 minute time frame and you don't expect your trades to last for a couple of days, it is always more better to just mark out the levels so that you can see where the liquidity is flowing. Like if it's going to break the upper high, like the previous day high, then it's an easy long. And if it's going to break the previous day low, then it's an easy short. But if it's bouncing between them, then it's a trading range trade. So you can't hold your trades for longer. You just have to look for the ideal 1 to 2, 1 to 3 setups where you get them and you have to exit quickly. Now, again, same thing is every day. I mark out my 7 a.m. candle. This is the point where I start watching the market every day without fail. I do not go early, I do not go late. Most of my trades never last beyond 12, but yeah, I start watching the market at 7 a.m. Again, context really important. Between previous day high and low, and essentially not doing anything and except for in a range. Very simply, don't even have to think about it. I don't actually mark it with this, I actually mark it with this. I mark it with this right here. Right here, this is the range, clear range forming. You have the white channel, yeah. So this is the white channel, still a channel. You can call this a trading range, you can call this a horizontal channel, doesn't matter, same thing. Price is bouncing up and down, can't really break above any point. Now in these kind of momentums, I always look for some perfect setup. Either I get a double top on the top, either I get a failed breakout, either I get a wedge. Other than that, I don't really like trading ranges, because you never know when price is going to break on either side. Now what did I do essentially here, and what did I watch? When I opened, prices in the middle, so my trade was nothing, right? Simple movement, prices going up, down, up, down. Now for me, what I always think about is that trading ranges are mostly two legs. So every part involves two legs. We watch it from here. You see, this is one leg, this is two leg. It broke down, couldn't really make the third leg, right? Again, when it can't make the third leg, it should go down two legs. One leg, two legs. After this, shouldn't have done anything. If I look from another, I start measuring from here, one leg, two leg, three leg. Three leg failure, it happens, right? And it also is doing one more thing. It has broken out of the trading range. Now, price is always most likely to continue doing what it is always doing. So right now, what it was doing is it was in a trading range. So that's what it should continue to do. When I saw this, one leg, two leg, and when I saw this third leg, and I saw this strong bear bar reversal, so this becomes an outside bear bar, and it is also a 2 bar reversal if you look at it, right, on a 5-minute chart. So I entered one short here. I had a short here, SL above this point, which was not, a really big SL for me. Now I was watching the price essentially very closely right here. Why was I watching price closely? Because it could still just pull back and still continue. That's still a likely possibility, because you don't know the future of the market. You just have to hold on to the trades. Understand, as soon as price reached there, I actually had moved my SL to above this bar, because maybe price moves up and I get a better entry in the form of a higher low, but I didn't want to risk the entire amount just to see it, watch it go against me. But since price never came back there, I was watching the price, and this became these 2 bars. See, this is how the market is dynamic. Here only 2 bars become the breakout mode. They essentially became the breakout mode. After that, there was a small pullback, and then again, exactly as I told you, we just saw on the MNQ chart, even though this is a trading range, it formed a tight range. That is all you had to look for. It formed a tight range. What does that mean? You have to trade with the trend. You have to trade bearish, at least till it goes there. And I was exactly holding on to this point, like the low of the trading channel, because I knew it would go there essentially at some point of time. I took this trade. I made a good 2.82, a good 33 points made on the trade. Simple trade, as you see. That's what you have to understand about price action. It is dynamic. Anything can happen at any moment. There will never be, this is the perfect day, this is the perfect entry. There are going to be sticky entries where you like the trade more than the others, and there are going to be wobbly entries where you don't. Now, you would ask me that why I didn't trade below this. As I've told you, I look for something clear near the lows. Either I have a double bottom, right, very clearly, and also a failed breakout. Why did this become a great trade? It was a 3-leg push, right, which mostly fails in a channel, and it was not that wide of a channel. And secondly, it had the failed breakout. It was trying to break out. Now this pullback, if this was a true trend, it would have had continuation to at least previous day highs. That's what my thinking was when I was taking the trade, and it became a great trade. And I didn't know it was going to become a great trade. It could have just been a break-even trade, but you have to risk the right amount of money at the right amount of time to get those gains. That is all for today, guys. So please keep analyzing your charts that way. Make smarter decisions. Put everything in binary terms. Is it going to be a yes or is it going to be a no? Do you want to take the trade? If you want to take the trade, what is the logic behind the trade? If you don't want to take the trade, what is the logic behind that trade? Yeah. Take care, guys. See you. Let me know if you have any questions in the comments.